Welcome to QAV Australia, episode 840. TK, it is the 7th of October, 2025, 12:14 p.m. in the King's Zone state, Kingsland, where we had the King's birthday holiday yesterday, and 1:14 p.m. down in you heathen southern estates with your daylight savings.
Mm-hmm. Loving the daylight saving. It was light here at 8 o'clock last night. Just fantastic.
Yeah. Well, good for you. Tony, how's your week been?
Really good, thank you. We'll get into it in after hours, I guess, but fairly social, which is good. We don't get many visitors down here at Cape Shack. We're a bit remote, but had a few catch-ups.
That was deliberate, wasn't it?
Yeah, I'm such an introvert. I just love it.
Yeah. Like us during COVID, we're like, I have to stay at home. Can't talk to anyone. Fantastic. How good is this?
Yeah.
Let me start with a bit of a portfolio update. Tony, for the last 30 days, the dummy portfolio is up 4.5%.
Wow.
Dropped a bit over the last couple of days. It was up 5.5% as of a couple of days ago, end of last week. Versus the index, which is up nothing, 0.06% in the last 30 days. Current calendar year, the index is up 11.8% versus the dummy portfolio up 29.16%.
Wow.
For the calendar year to date.
Well, you said you were waiting for it. You said you were waiting for the year to outperform.
Yeah. Most of that since July. It's just gone bonkers in the last couple of months.
Yep.
I don't know why. I don't have to know why.
Latest company reports.
Well, yeah, but why? We had reporting season last year and it didn't do well.
True.
Why?
Scientists don't ask why.
But that's the thing. Oh, okay. I don't ask. Well, that's the good thing about this is I don't need to know. It's just, to me, it's just QAV's working, philosophy. Right? It's right.
How is physics?
Well, the why is because we try and identify undervalued companies that are being well run and we invest in them and just let physics do the work, right?
That's how it works. Anyway.
And the light, I'll do the light analysis too while I'm here because I like to see happy numbers there. For the last 30 days in the light portfolio, it's up 8.7% versus the index up 0.06 still. So it's doing even better, the group, than the dummy. And for the current calendar year, it's up 32.56%.
Oh.
Yeah.
Well, hats off to all the light subscribers who stuck with it because it was slow going in the first years, but they're reaping the rewards now.
Dismal. And all time for the light portfolios. So this is since February 2022, the index is up 11.4%. Dummy portfolio as a group is up 20.62%.
The light portfolio.
Is that what I said? What did I say?
You said dummy.
Sorry, portfolio. Light portfolio as a group up 20 points. So it's almost doing double market now.
Mm-hmm.
Coming from negative double market not that long ago to double market. And you have always said this, it just takes 1 year. And in fact, it's been since reporting season, end of July.
Yep.
Just shot through the roof. Be fully invested, play the game, play by the rules, just let the cycles come and go.
It's blackjack, baby. You can't tell when the cards are going to turn, but if they turn when you're not there, you lose all the money.
Like we've been doing this show for 6 years. I understand the theory. I sprout the theory. I believe in the theory. I'm a true believer. You and I were just talking off air about faith and belief.
Not in this.
I believe it. No, but I do believe it. I've seen it play out a couple of times now, but it's still somewhat surprising to me when I see this happen, knowing that as an amateur, I can just follow the system that you built and it just works. It's insane how simple it is, really, in concept. You know, you did a lot of work to put it together, but the concept of it look for businesses that are doing okay but are undervalued for some reason, invest in them, and more often than not, they'll probably outperform. I mean, it's so simple. You could write it on the back of a playing card.
Yeah, that's right. But human psychology gets, like to tell you a story. I don't think my friend will be listening, but I met up with a friend I hadn't seen for a while on the weekend. And invariably we come around to talk about stocks because he was a QAV subscriber and is not new. And he was talking about his stock portfolio. He was using a financial planner and it's going well, etc. And he said, and you wouldn't believe it, there's 3 stocks I still have from when I was a QAV subscriber. They're my best performers. They're up a heap. I'm like, what is that telling you?
Surprise, surprise, surprise.
Anyway. I mean, it's fair enough. He said he just didn't have the time and was busy with work, et cetera, et cetera. So he wanted to do something a little bit more passive. So I said, yeah, that's fine.
Right. Yeah, I was on the value investing subreddit the other day, and there was a post called "Most people are better off being growth investors," including this sub. And somebody was making an argument that, value investing's done and can't perform and blah-de-blah-de-blah. My reply was, I'm not sure how you define most people, but anyone who wants to consistently outperform the market over the long term can still do so with some knowledge about how to find undervalued stocks and a ton of discipline so you ignore the noise. Anyone who says different either doesn't know what they're talking about or is trying to sell you something. Despite you saying the market today isn't filled with value opportunities, I just did my US buy list for the week and there's 170 stocks on it that are all coming up as scoring well for being undervalued while still generating a lot of cash. I'll take my chances with those over growth stocks any day. And it's had no likes, no likes, no likes, no questions, nothing. Just.
And you're a prophet in your own land there. You're on a value investing subreddit. No likes.
Yeah.
But what's the mentality of someone going onto a value investing subreddit telling them they're all dumb and they should be into growth stocks? I mean, first of all, if growth stocks were working, you'd be too busy buying growth stocks to try and troll the value investors. What's the point?
Well, they if you've been buying Mag 7, you've probably done okay in the short term. But yeah, I wouldn't want to be in it for the long term.
Correct.
All right, well, back to news anyway. RBA, Tony, you had a prediction last week. How did your prediction go?
Oh, 1 out of 1. That's a trend.
100%.
Yeah.
Unless you include the previous one.
Oh, like 50%. That's still pretty good. Yeah.
It's good odds.
Yeah.
So rates are on hold.
Yeah, rates are on hold. I saw an article today in the paper where economists, the consensus is there'll be 2 more rate cuts. I'm not so sure. I don't think the economy is that strong. Anecdotally, also, I don't know. I can't predict it.
What did Sheriff Bullock have to say? I didn't really pay much attention.
No, not at all, to be honest.
Oh, okay.
It's this age-old argument. There was a 1-month CPI number. They're waiting for the quarterly CPI number to come in before they make a decision.
Right.
I'm like, can't you just do rolling 3 months? What? This is a dumb excuse. You've got 400 economists working for you at the surely someone can update the spreadsheet every month to add the last 2, give you a rolling number. Come on.
And really, they're just getting ChatGPT to do it all now anyway, I'm pretty sure.
And if you can't make a decision except for when the quarterly number comes out, just meet 4 times a year. Don't bother us for the rest.
Now, gee,
I
you're
should
so
start
hard
a
on these
Doge department.
Yeah. Okay, well, in other news, Warren Buffett, his last big deal, it's being called, Tony. Berkshire Hathaway is buying OxyChem, the chemical business of Occidental Petroleum, for $9.7 billion in cash. I thought he already owned Occidental Petroleum. Is it Occidental Insurance that he owns?
He owns a big share of Occidental Petroleum. Yeah.
Right.
So he was kind of dealing with himself. there. And I did read the article you sent through, and a lot of the analysts were critical because they thought that Occidental and Berkshire would use scrip to buy this chemical business, but Warren's got $300 billion of US dollars of cash, so he used cash, which means that Occidental now face a capital gains tax bill on the sale as well. So it's not looking like a good deal for Occidental, but it's a good deal for Berkshire. But, two things are wrong with that headline. $9 billion isn't a big deal for Berkshire Hathaway. When you got $300 billion in your back pocket, US.
340
There you
billion.
go. Yeah, sorry, I shortchanged them by 10% or 11%.
Yeah.
Yeah. So they could have bought
billion
that
is what,
business
3%?
4 times with my rounding error. Yeah. So it's not a big deal for them. I've read some articles recently about potential big mergers happening in the railroads in the US. So, Berkshire owns a big railroad company. So that could be a big deal for them if they happen to get the approvals to merge with another one. That'd be a big deal. So that's the first thing. It's not a big deal. It's chump change for Berkshire. And secondly, the only way that's Warren's last big deal is if he happens to die tomorrow, because he'll keep making deals until they put him in the green. So I doubt if it's the last action he takes.
Also in that article, it said Warren is no longer raising millions for charity by auctioning off the opportunity to have lunch with him, as he has in years past, but a bronze bust of him sold this week for $26,201 in an eBay sale organised by Monish Pabrai, an investor who calls himself an ardent disciple of Buffett. It is for the benefit of the Dakshana Foundation, which offers higher education entrance exam coaching to impoverished students in rural India as part of an effort to alleviate poverty. Did you buy that by any chance? I expected to see it on your desk when you rang in today.
As a value investor, I can probably pick up the bus cheaper if I go to the Berkshire Hathaway's store somewhere. I'm pretty sure I saw them in the big hall when I was there for their 50th AGM, and they weren't 27,000. But good on him. From memory, he's the author of the Taoist Investor or the Dando Investor, something like that. One of the books that we reviewed.
Dando?
Yeah, when it came out.
I think so.
Which is a good read, and I'd recommend. So good on him, raising money for charity.
I'd have a bust of Warren and a bust of Napoleon side by side. I think that'd be nice. And Caesar. We'll put Caesar in there as well. And one of you, just to round it out.
Did I tell you Alex made a bust of me once, but it exploded in the kilns? Oh, you don't have it.
Wow, that's a sign from the heavens.
It is, isn't it? Yeah.
Hey, before I throw to you to talk about news, just as I was doing a last check of things before I came on air today and looking at the portfolio, EDU Holdings is up 19% today. Today.
Do you know why?
I do. I went to Stock Doctor. They put out a press release today. Icon T3 25 enrollments up 82% on PCP. I think that's a drug. I think that means 82% of their students are taking PCP. And for some reason, the market really liked that news. EDU Holdings, a leading tertiary education group, is pleased to report continued strong growth in new and total student enrollments for trimester 3 2025 in its higher education business Icon Institute. Anyway, it's at 82% on the previous period, the previous corresponding period, the PCP. So, yeah, up 19%. I added it to a light portfolio on the 18th of September. What's that, 2 and a bit weeks ago? It's up 42% since then.
Oh, that's great. I think I did a pulled pork on that a couple of months ago, didn't I?
I think you did, yeah.
Icon Group, I remember talking about Icon.
Yeah. So there you go. There's a win.
Yes.
But that's all I've got. Very low news week. I've been running my news script every day. Nothing's coming up that's relating to any of our stocks. What have you got?
Not even the merger between Southern Cross Media and Seven West Media?
We talked about that last week.
Well, it happened when we were on air. But this is more information that's come to light since then.
Oh, okay. No,
Well,
Well, it did come up, but I ignored it.
the bit of news I wanted to share was it seems there's a bit of a backlash from a lot of the investors involved in Southern Cross Media in particular, because this is another example where the deal doesn't have to go in front of the shareholders. Remember we talked about this a little while ago, James Hardie, their investors were up in arms because they were merging with a US company in a script deal, and there's a loophole in the listings rules which allowed them to do that without going in front of the shareholders for a vote. Same thing seems to have happened now. So it's poor old ASX is just bursting at the seams at the moment. It's just creaking like a rust bucket. Needs to be traded. Anyway, there's an article I wanted to quote from. So I'll just skip through this a bit. But people who don't know, they're two media companies. Seven West is owned by Kerry Stokes and his family, and they're merging with Southern Cross, which owns the Triple M radio networks and a few other things. The article says, critics have drawn the comparison to recent controversies surrounding James Hardie's takeover of US group AZEC, which involved a $14 billion buyout that its own shareholders could do nothing to stop. Under ASX listing rules, companies need shareholder approval to issue more than 15% of new shares. There is an exemption, however, when entering a takeover. These rules are currently under review by the ASX. Sandon Capital Managing Director Gabriel Radzyminski, who has been building a significant stake in Southern Cross and currently owns 11.3%, said it was nonsensical for companies to be able to take huge actions without shareholder input. There are a few ways to destroy shareholder value. One is by shareholder acquisition. Because of this ASX loophole, that risk is one of the only areas where shareholders have no means of protecting themselves, he said. If a transaction is really that good, make the case to shareholders. So,
and who is going to be our guest on the show next week?
Gabriel Radzyminski.
He is. He's going to come on and talk to us about his approach to value investing and being an activist investor.
So that's a bit of a tease for his appearance next week. Yeah, so thank you to the listener who suggested that. And well done, Cam, for going out and organising it.
Yeah, I can't even remember who it was, but you know who you are. Somebody sent me an email suggesting we get him on. I'll give him a thank you when I look at my email. Yeah, that should be good. So so that's a big deal. So he's saying there should be more transparency, more.
Yeah, that particular loophole should go. Interestingly enough, there's been a few articles to and fro in the AFR in the last week about it, and some after James Hardie did their deal, mostly by M&A lawyers, saying it would be a terrible thing to see this loophole closed. It's like barbers complaining about bald men. It's bad for business. But there was no real reason why that they could put that you shouldn't get rid of the loophole, other than that there'd be less script takeovers, but that's probably a good thing. Yep, it's just part of the erosion of small shareholders' guardrails on the ASX. So let's see what Gabriel has to say in person next week about. Yeah.
What else you got?
Stephen Mayne, in one of his columns recently, he often bangs on about small retail shareholders getting the rough end of the pineapple when companies raise money, because oftentimes the company raises shares through their big institutional shareholders, and it's all done and dusted before the small retailers even find out about it. That's if they get a chance to join in. But apparently one of the companies, I don't think it's on the buy list now, but it has been. I certainly did a pulled pork in the last 12 months on it. Vulcan steel making company we spoke about. They did a fairly novel fundraising, which Stephen Mayne has highlighted and praised. So what they did was they did a share raising, but they also gave retail shareholders a right, which they could exercise if they didn't take up their share allocation in the placement. And so there was a retail shortfall auction of 2 million shares, which generated $1.25 per share compensation payment for retail investors who didn't participate in the raising. And it also meant the retail shareholders who did participate got more than what they asked for. Because usually the way these things work, as public investors who are listening would know, is that you get scaled back. But it looks like it was a win-win for retail investors, for those who applied for shares and those who didn't. They both got something out of it. So Stephen says he couldn't recall a structure like that ever being run before, but well done to Vulcan Steel for pioneering something new. So hopefully some other companies will catch on to that.
Horseshoe loves Vulcan Steel.
Yeah. Was it Blue Heron loves Anacott Steel? Something like that.
Anacott. Blue Horseshoe.
Blue Horseshoe.
Blue Horseshoe loves Anacott Steel, said Bud Fox.
Yeah.
Have you watched the Charlie Sheen documentary?
I watched the first one. I haven't gone through the second one yet. Pretty wild.
Is it worth watching?
Yeah, definitely. Very wild, as you'd expect. Great. Oh, you'll love it, because there's a great scene where he first meets. I won't, actually, I'll set the scene for you. Charlie Sheen says, I got out of my car. We're in West Hollywood with my friends, looking for a party. I hear this voice. What do you think of my watch? Look at my watch. Isn't it beautiful? It's a great watch. What do you think of my watch? He stumbles across in the dark, and there's Nick Cage outside of the party showing his watch to a girl. And they become friends. And then Charlie goes and lives. Nick Cage buys a castle in Hollywood somewhere. Charlie goes and lives there. And he goes, it's probably not the place you'd want to live. It's a really seedy, crime-ridden part of Hollywood. So I asked Nick, why'd you buy the house here? He goes, I want to be close to the truth, Charlie. I want to be close to the truth.
Oh my God. Like, there needs to be a buddy movie with Nick Cage and Charlie Sheen.
Yeah.
Oh, man.
Yeah,
Crazy.
So it's pretty good. Anyway, back to the wonderful world of investing.
I just saw a story in the Financial Review. It says Chanticleer today. Peter Lynch doesn't own AI stocks. OpenAI's crazy new deal shows why.
Uh-huh.
The latest agreement between Sam Altman's firm and chipmaker AMD is yet another mind-bending example of the circular artificial intelligence economy. An investing icon is right to question it. Not the EDU icon, different kind of icon. Lynch once said, go for a business that any idiot can run, because sooner or later any idiot probably is going to be running it. One of the great quotes.
Yep.
In his latest interview on CNBC's The Compound and Friends podcast, the former stock picker politely declined to say what he owns these days, but he did give a big clue about what he doesn't own. I have 0 AI stocks, Lynch said. I literally couldn't pronounce NVIDIA until about 8 months ago. I have this expression, know what you own, Lynch said. If you don't understand what you own, you're toast. I got to acknowledge, though, I don't understand anything that I own. Well, I understand why I bought it, yes, but I don't understand it.
Our circle of competence is knowing that they throw off lots of cash.
And that they're undervalued. By some metrics, yeah. Lynch says he simply doesn't know enough about the AI world to pass judgment, so he doesn't. But as he noted on the podcast, and this sounded like you, punters will spend hours to ensure they get the cheapest plane flight and then put $10,000 in some crazy stock they heard about on the bus.
Yep.
So, yeah.
Good on you, Mr. Lynch. There was another article calling NVIDIA's purchase of money into, what's it called, OpenAI? ChatGPT's company? Anyway,
yeah.
It was called a Ponzi scheme, which pretty much is. And NVIDIA put money into OpenAI so they can buy chips for NVIDIA with the money.
Yeah. What's wrong with that?
What's wrong with it? Well, take it to extremes. Everything just becomes a department of NVIDIA.
Well, this is the news today is that AMD have done a deal with OpenAI. AMD's obviously another chip maker. But I'm not sure. I haven't read through the terms of the deal. But AMD has given OpenAI warrants over its stock, such as one day in the foggy future, OpenAI could end up owning 10% of AMD. It's a perfect deal for OpenAI, which appears to get two things, chips and a stake in AMD for nothing.
Wow.
There you go. And apparently AMD's share price jumped 21% on the announcement of the deal, that it's giving away chips to OpenAI.
Yeah, that kind of seems to ask about, doesn't it? They give away the chips and OpenAI pays for it by getting a free stake in the company. That's not how trade normally works.
Nvidia's stock jumped when it announced a deal, which seems very much in conflict with the AMD arrangement, frankly, whereby it would pump $100 billion into OpenAI's shares. Hold on, this is weird. The fin has $100 billion and then 1.5 billion in brackets after that. Like saying it's a 1.5 Australian.
Yeah, ChatGPT does the subediting for the fin these days. Yeah. Tried to
in return for OpenAI
Nothing to see here.
buying a lot of Nvidia chips.
Oh dear.
Yeah. So chip makers, battling to see who has the most chips that OpenAI will be running on. Anyway, yeah, it's an interesting time. But good to see Peter Lynch calling bullshit on that. Unlike our friend Ray Dalio when he acknowledged a couple of years ago that he was investing in Bitcoin because his son talked him into it.
Well, he's probably done okay since then too.
Probably done very well, yeah. But it's the principle of the thing. What else you got?
I've got another story about stock. I think it's on the buy list this week, but it's certainly been up recently. A1M, which is called AIC Mines, and it's been made a star stock by a stock doctor recently. So that's always a tick of approval, and it will improve the score on the buy list for this company. And Kian Trim wrote a quick article about it saying AIC Mines is transitioning from a small underground copper gold operation into a mid-tier copper company formed in 2019 through the merger of Intrepid Mines and AIC Resources. It has revived the long-running Eloise copper mine in North Queensland and is developing the nearby Jericho deposit. FY25 revenue rose 5%, with underlying earnings up 22%. Copper production held steady, while all-in sustaining costs fell 3%, supported by stronger copper prices, higher gold by-product credits, and disciplined cost result. Return on invested capital improved to 9.7 from 8.6%. So AIC's had a good year.
It's running through my head now.
Eloise.
Yeah.
Oh yeah, me too.
Do you know the original? You know the damned version. You know the original by Barry Ryan?
I don't think so. I do know the damned version.
Oh, okay. Yeah, the Barry Ryan version is great. 1968, the original. Every night I'm there. I'm always there. She knows I'm there and heaven knows. Bum, bum. I hope she goes. Bum, bum. Ah, great song.
Isn't it?
I don't own AIC or A1M. It is something that I'm always looking at, though. It's on the buy list, on the checklist. Yeah, interesting.
I think copper may have become a buy this week. Am I right? I don't think we have been able to buy it until recently because of its commodity.
Copper. Yeah, copper is a buy. Not this week. Might have been last week.
Okay.
Yeah.
And I think there's been some articles I've been reading about copper. It's due to some problems with one of the bigger producing mines in the world, which is shut down temporarily. So I don't know how long it will remain a buy, but it's certainly elevated at the moment in terms of prices. So that big mine shuts down for a while.
What's next?
Pulled pork time.
How you doing, TK?
Harmony. What the world needs now. Harmony.
Oh. Excellent. Yeah, I've seen them on the buy list too. I had to check them manually for an audit. Harmony. Interesting business. I do own them in the 223 portfolio too. Added them back on the 8th of September. They're up 13%, so don't blow it.
Ha! Well, hopefully there's another EDU. I should say from the outset, Harmony Corp, HMY is the code. They're a small ADT stock of some $28,000 on average traded per day, so it would suit some of the bigger investors listening, but the smaller ones can have a look. The market cap's only about around $100 million, so it's not a big company. I found it interesting that they're another online lender, which seems to be a theme on the buy list this year. Gold stocks and online lenders like Pepper Money, Plenty, and now we have Harmony. I think we've had Hum as well at some stage. So it's...
And Findy kind of fit into that category too, in a way?
A little bit. They're more ATMs, but yeah, a little bit. But yeah, so who are they? They're based in Auckland. They began life in 2014, founded by a guy called Neil Roberts. And before that, he certainly has substantial experience in the consumer finance business segment. He ran a company in New Zealand called PRF Direct, which was the direct division of a New Zealand retail company, PRG Group. The business sold personal loans to consumers. And then he finished up there when that business was sold to GE Money, which is now Latitude Financial Services, and held senior roles in other finances companies, for example, head of sales and business development at Flexi Group. That's now called Hum. So he's been in the industry for a long time, and he founded Harmony in New Zealand back in 2014. That's a bit of their history. They're based in Auckland, but they do operate in Australia as well. So operate in Australia and New Zealand. They offer digital personal loans online. They use technology. I hate to say it. Of course, their presentations are now all about AI. I'm not sure how much AI goes into it, but they claim there's a lot in terms of being able to turn around loan applications quickly through their platform. Their personal loans are used for a whole range of purposes, and not necessarily auto loans per se, but that's a fairly big use for it. And they plan to offer securitized auto loans soon, so secured by the underlying vehicle. But yeah, people can take out a personal loan to purchase a vehicle now, but they can take it out for all sorts of things like debt consolidation if they've got too many credit cards, or going on a holiday or whatever. I think some of the salient points, they have a very low cost to income ratio. I'll go through the numbers quickly soon. They have updated their software platform to a software package they're calling Stellar, Stellare. I'm not sure if I'm pronouncing that right, but Stellar 2 is their customer acquisition and credit assessment engine. And they're turning over about 10,000 new applications per month. One of the good things about their business that they highlight is that they have a lot of repeat trade, and on average, the existing customer base comes back and borrows another 150% compared to what they borrowed originally in additional lending. So, for example, if someone borrows 20,000, they on average come back and take out another loan for 30,000 at some stage down the track. So that's good. That's low cost marketing. Their loan book is growing. They're saying the loan book is growing, and they're now returning about 10% interest margin and a cost to income ratio of 19%, which is very, very low. And they're securing funding both through issuing asset-backed securities, but also from the big four banks, or three of the big four banks who are providing what would you call it? The ability to offer loans. So they're getting funding from the big four banks. I wanted to drill down a bit on that cost to income ratio just to show the benefit of being an online only lender. So I asked ChatGPT for some comparable numbers from the four major banks, and the four major banks don't really call out their cost to income ratios on their personal lending books. Overall, the four major banks have cost to income net interest margins of less than 2% and cost to income ratios of about 50% overall. It's difficult to get figures for the personal loans separately, but ChatGPT estimates that Net income margin is about 10% on personal loans for the major banks, and the cost to income ratio is north of 50%, sometimes as high as 80%. So, this company has a cost to income ratio of 19%, and it has a net interest margin about the same as the major bank. So it certainly has the ability to grow market share by offering cheaper loans to grow share. What else can I say about them? Their FY26 guidance was really good. They're guiding that their NPAT will increase by 111% in FY26. They've been growing quite quickly, and according to Stock Doctor, and Stock Doctor's numbers go back to 2020. This is the first half that they've made money. So I don't know if they've made money prior to 2020 when I couldn't see numbers in Stock Doctor, but maybe since COVID, it's their first profitable half, and that's kind of turned the share price around as well. Onto their results, the NPAT this half was 5.4 this year. I think it was 5.5 million, which is nearly a $19 million increase over the losses they had in the prior periods. The loan book grew by 9%. But however, they are growing quicker in Australia than that. So new customer growth in Australia was plus 40%, which is good. And that's with the deployment of this new software package still out too. It's growing even quicker in more recent months than over the past 12. Low credit losses. So credit losses are down to 3.7% versus 4.1% in FY24. So that's good. Again, I guess that's probably because of their better credit scoring engine. And one thing that they did highlight, which I think is really important, is that the automation is allowing this business to scale revenue at a much faster rate than it scales costs. So we'd expect to see margin improvement over time as well. In the news recently, this company announced that its founder, Neil Roberts, sold some of his shares in the company, about 3.5%, but he still has, I think it's around 15%, but I'll get to that when I get to the numbers. And he's transitioned from being the chief strategy officer on July 1 to being a director. So he's still on the board. He was the CEO up until 2019, and there you go. He's still got 15% of the company. So he's an owner-founder sitting on the board. He came by way of other companies through Flexi Group, and the current CEO is ex-Flexi Group. So the management of this company certainly does have knowledge of the industry. QAV numbers, stock price I used was 93 cents. IV1 is 28 cents, IV2 is $1.02, so the stock price is below IV2 but above IV1. Interestingly enough, it's half of consensus targets, so all the people are expecting that 111% increase in NPAT to flow through next year. Net equity per share is only 33 cents, so we can't buy it at book value or book plus 30. Stock Doctor financial health is only marginal, but it's improving on prior halves. So the trend is recovering, which I like. So things are improving, and we scored a 2 for that. Stockopedia only rank at 57 for quality, but the overall rank is 92. So we're certainly seeing momentum and value in the stock. F score is 6 out of 9, so it's okay on the quality side of things from that perspective. PE is 17 times, but we only have one PE for the last 3 years because it hasn't made money, so we can't score it for that. PropCap is a low 2.76 times, so that's what's driving its high position on the buy list. And as I said before, earnings per share growth. Stock Doctor is saying earnings per share growth at 88%. Harmony was saying 111. So I think Stock Doctor take their growth forecast from the brokers that cover the stock. So maybe the brokers are a little bit less bullish than the company itself. But anyway, growth over PE is 5.11. So that's way above our 1.5 hurdle. So it gets a tick for that. Company doesn't have any dividends, so we can't score it for that. Does have an owner-founder, as I said. Neil Roberts remains a director and holds 15.3% of stock, so it scores for that. So overall, 13 out of 15 for quality, or 87%. and a QAV score of 0.31. So it's quite high on the buy list. In terms of its risks and opportunities, obviously the positives are having David Stevens on the board still, and the ex-CEO of Flexi Group, who's now the current CEO of this company. And Flexi Group is now Hum, so well versed on what's going on in the sector. I think this scalability of tech is going to be a benefit for them. I'm guessing, I didn't go and drill down as to why they lost money in prior halves, but I'm guessing it was because they were investing in this latest generation that's come out. So we'll see how that goes over the course of the year and whether they get their doubling of EPS. But if they can grow revenue at a higher rate than cost, then that should be a good thing for the company. It's a sweet spot in the cycle. So we've had a couple of interest rate cuts. Unemployment is low. They have a low cost to income ratio to attack other banks with. So it's all a good part of the cycle for them. And of course, the flip side is at some stages the economic cycle won't be as good, and then that'll be a downturn in borrowing, and potentially funding sources may dry up, but I don't know how long into the future that is. The other thing to be aware of is, as I said, there's a number of people playing in this space now, so it's a competitive area, but there is plenty of market share upside, especially if they can steal some of this from the current banks which operate in the personal loan space. So interesting little company, and looks like it's kicking some goals. So have a look at Harmony Corp.
Thank you, Tony. And while you were doing that, and I mentioned Findy, I thought, I wonder how Findy's doing.
And
I added Findy to one of the light portfolios on the 8th of May last year, 2024, at $3.22. By November 2024, it hit $8, and it's currently $3.18. So we're in fact 1% down on Findy now, from over 100% up, 150% up. We're to negative 1%. And I was like, the CEO of Findy also was going to come on our show last year and then started ghosting me. He want to hide now too, I tell you. I was looking through their news releases. There's nothing big that I can see here, just lots of deal announcements. Their FY25 result came out and they dropped 8% from that. Their previous results, they dropped 8%. No, it was the same result. They just, I don't know. The market loved them for a hot minute and then doesn't love them anymore for some reason.
Yeah, I don't think Findy's a direct competitor of Harmony. I think they're more in the ATM space from memory. There was, I think
in India.
Yeah, in India, which is underbanked. They did have some other products that was offering mobile banking, I think from memory, to people who didn't have access to banking. So that's a good thing. But I think the big driver of their share price, if I've got this right, was they were going to float a portion of their business on the Indian stock exchange. So it will depend on how the market sees that as progressing, whether it's being pushed back or I'm not sure what's going on with that, whether there's been some more news about it. But that was what was driving the share price anyway for a while.
Right. Well, there you go. Gone from being a superstar in the portfolio to a dud. We'll see what happens next.
Yeah. Yep. That happens.
Okay, after hours, Tony?
Yeah, a couple of things. I've had a nice day on Saturday. I went out to Flemington to the Thermal Steaks Day with Ruddy. We had a nice lunch in the members' dining room, caught up with some friends, so that was lovely. He came down from Wagga Wagga. Yeah, it was nice. And continuing on the social trend, I had the visit from Alex and her boyfriend and their family yesterday. So they drove around to come and see us. They're over here from Adelaide holiday, well, the parents are. And Alex and Sean came down from Melbourne. So it was lovely. Had a nice week of socialising, which I don't often do down here at Cape Schanck away from things. And on the listening front, Red Continent. Have you heard that, Cam?
Oh, what's that?
So Jim Mogini or Mogany and Rob Hurst, two ex-members of Midnight Oil.
Hurst.
Yeah, so they're continuing to record, and they put out an EP recently. It's pretty good. in the style of Midnight Oil.
Is the group called Red Continent, or is that the
No,
album name?
that's the name of the EP. I think it's only got 4 or 5 tracks on it, but they're pretty good.
Right. Oh, I'll check that out. I love Rob Hurst.
Yeah.
Great drummer.
He is, isn't he?
Well, I've got a film for you, Stalker by Andrei Tarkovsky. You ever seen a Tarkovsky film?
Oh, no, I don't.
You'll love it.
Okay.
I think you'll love it. Tarkovsky, Soviet art house director, 70s and 80s. He died in 86, age 54. Much beloved by David Stratton. I remember.
He didn't
David Stratton used.
Did Tarkovsky make Solaris?
He did make Solaris, the original Solaris.
Yeah.
You remember David talking about that?
No.
When Soderbergh and Clooney's remake of it came out, and I remember David just saying, no, the Tarkovsky film was far superior. And I'd never heard of Tarkovsky, and I tracked it down somehow and watched it after that and loved it. Very moody, no dialogue. Well, Stalker's another film he made in 79. He did 5 films, and it was the last of his films. Oh, no, he made a couple more after that, sorry. But he made them outside of the Soviet Union. I think he moved to Paris. But a Russian friend of mine at Kung Fu said, have you seen Stalker by Tarkovsky? I said, no. He goes, oh, you got to see this. It's great. So I've been watching it, and it's fantastic. Very Lynchy. Based on a science fiction novel about 3 guys, the stalker, the professor, and the writer. And the stalker is taking the other 2 to the zone where all their wishes will come true. And that's all you know. And it's very mysterious, very atmospheric, not a lot of dialogue, beautifully shot. You can find it on YouTube. So there's a YouTube channel called Mosfilm, M-O-S, Moscow Film, Mosfilm, that has a whole bunch of Soviet films for free. And this is one of them that I've been watching, and it's beautiful. Must be a digitally remastered version of it. It looks glorious and just really weird and moody. So, yeah, very Lynchy. It reminds me at the beginning a lot of Eraserhead, but was made after Eraserhead. Eraserhead was like 77, 78, I think, wasn't it?
Oh, I'm not sure. I remember seeing it at uni, so it must have been done by the 80s.
77, just looked it up. Yeah. Anyway, I highly recommend that. As I mentioned off air, I've been reading Asimov's original I, Robot novel, which I'd never read before. I think we talked about some of his short stories in the Positronic Brain last year when I read one. But I got into this and I was just really, it's kind of archaic, 1950, so his depiction of robots and everything's a little bit off. But his introduction of the 3 laws of robotics I found fascinating. The way he positions it, the way he introduces it, and the problems inherent in the logic of it was brilliant. Like really, really clever.
Yeah.
Not surprisingly for Asimov.
It was 2 books. It's the rest of the robots as well. Keeps the theme going.
Right. Well, the one I'm not sure if the one I'm reading is a compilation but there's up to like chapter 4. But I liked I think the 3rd chapter, the 2 main guys, Donovan and whoever the other one is, the 2 robot engineers. They're on some distant space station where they put together an advanced robot, QT1, and it's a highly advanced, intelligent robot. And the first thing it says is, they said, we major, and it's like, yeah, I don't think that makes any sense. I'm going to have to take some time to reason this out because I'm obviously far superior to you, and it doesn't make any sense logically that a less superior being could build a more superior being. So I'm not buying that. They're telling him that there's all these humans, there's billions of humans on Earth that make robots, and it's like, nah. So it ends up basically building a cult where it and the robots are worshipping the master, which made all things, and believes that the humans are just delusional because they believe in this fairy tale because they have to tell themselves that because they're inferior.
Mm-hmm.
Anyway, fascinating.
Great stories. Almost detective stories.
Yeah, but also interesting to me to read it. So here we are 75 years later. He was trying to work out how do you design artificial intelligence in a way that it will be aligned with what's good for humans. Here we are 75 years later. We're now actually dealing with that, and we still have no idea what we're doing, how to do it. Everyone's mucking around trying to talk about alignment, but when you read between the lines, no one cares. No, it's just like build it as quickly as possible, make as much money as possible, establish our dominance, and we'll worry about it later. We'll worry about stopping it from killing us all down the track.
That's what we were talking about off air before too. Like 100 years ago or so, the Royal Society of England would have been the hotbed of debate about AI. All the great minds of the world would have gotten together, made presentations, debated, argued, come up with a good solution. Now it's like it's been corrupted by capitalism. It's like we got to build our own IP, keep it quiet, get out there fast in the market, build a moat, become dominant, gather all the eyeballs, bugger if it's good for society or not.
Yeah, we'll worry about that later. Well, actually, that reminds me, I told you that I just did a couple of shows on fascism this morning on the Bullshit Filter with Ray, talking about Mussolini and Hitler and the rise of fascism in their respective countries. And, when you study the history of it, fascism both in Italy and Germany was, as Trotsky wrote in the early 30s, it was the response of the bourgeoisie to what they saw as the imminent threat of socialism post the Russian Revolution and World War I and then the Great Depression in Germany's case. The threat of socialism arising in their countries, they needed someone at arm's length to come in and crush the unions and the workers and the socialists. They outsourced that in both cases to the black shirts and then to the brown shirts, and then put them in positions of power legally to finish the job, to crush socialism. There was the industrialists and the large landowners and the church that came together to put the fascists in power in Italy and Germany with the view that, well, we'll just put them in power for a few years and they can crush the socialists and then we'll get rid of them and everything will be fine, right?
Yeah, right. They just got rid of their natural opposition.
Yeah. It was the short-termism. Well, we'll just give them dictatorial powers. Well, they didn't even think that. We'll just put them in government. And then the first thing that in both cases they did was take dictatorial powers and then get rid of all of the opposition and all of the dissent. And
we'll just put AI in charge.
Did not end well.
See how that goes, yeah.
It's this short-termist thinking. Like Ray and I always laugh when we did the Caesar show. The assassins of Julius Caesar, Brutus and Cassius. Like it was step 1, kill Caesar. Step 2, let's not worry about that right now. Like whoa.
I got a million things.
Let's not get ahead of ourselves.
What's on my plate? Come on, just do it.
Yeah. What are we going to do after we kill Caesar? Well, we'll worry about that when we worry about that. Let's not get ahead of ourselves here. You think too hard. Stop overthinking it.
Stop predicting.
Let's just kill Caesar and yeah. Never turns out well, this short-termism, which, and I've said this before, this is why the Chinese are brilliant. The Chinese figured out the flaw in capitalism, which is short-term thinking. Capitalists only think as far as next quarter's profit statement. And the Chinese came in after Dong took over and was like, you can make stuff cheaper if you give it to us to make. Just give us all of your manufacturing, finance our factories, teach us everything, and you'll make better profits. You'll be able to keep more money. It'll all be great.
It's not just capitalism, it's democracy. As we do it with 3 or 4 year terms. You can't. Which government's going to invest to build a highway if it takes 10 years?
Yeah, well, it's democracy as we do it. That's right. It's the short-termist view of democracy. China has a democracy too, but their democracy is, we're going to take 100 years to
Right.
become the most powerful country on the planet again, and no one get in the way of that. We got a plan. We got a vision.
Yeah.
50 years, actually, is what Dong said.
And when in 10 years or 20 years or 50 years it becomes an issue, then America will throw all its resources at a short-term solution for it.
Yeah. Oh, how do we stop it?
A bit like climate change. It's not really affecting us yet.
Yeah. But we said during COVID, when COVID hit and every government in the world said, right, we need to fix this now. This is going to hurt the economy. We need to get on it. And all of a sudden you could just print money out of the blue to fix a problem.
Yeah, no, exactly.
Can't do that to fix climate change, but to fix COVID, sure, whatever it takes.
You could do it to fix climate change, potentially.
I know, but they won't. They said you can't. We've been told for the last couple of decades, well, we can't do anything that might affect the economy to prevent climate change. COVID, yeah, we just print money. We'll worry about what that means later on.
Because you're sitting in a room of, what's the temperature in Brisbane today? The start
34
of October.
in my office right
34.
now.
Start of October.
I got my Kung Fu grading pre-assessment on Friday. It's going to be 35. I'm going to be doing 2 hours of Kung Fu in 35-degree heat. It's going to be so much fun.
I'm guessing the gym is air-conditioned, the dojo?
It is air-conditioned. Unfortunately, the air conditioning always seems to fall over and die. That's what they tell us, because their previous dojo before this one had no air conditioning and no fans and was in corrugated iron. And all the old timers say to us, you guys are so weak. You should have been in the old school. My music recommendation this week, Tony, is Lyle Lovett.
Really?
You ever gotten to Lyle Lovett?
I have not.
I've loved Lyle Lovett for decades. I hate country music, but my exceptions are always Johnny Cash, Dolly Parton, Kenny Rogers, Lyle Lovett, and I don't know, maybe and Willie Nelson. Like they're the five that you're allowed to listen to.
Really? Johnny Cash, maybe.
Yeah.
Okay.
You know, like Dolly Parton? Come on. Anyway, Lyle Lovett, he's kind of sits in this weird space between, it's sort of Americana country. It's more like sort of Neil Young, I think of him in that sort of space. There's an album he came out with in the early 90s called I Love Everybody, which I've always loved. I used to have it on CD, and I've just got back into listening to it again, along with some of his more recent albums with a big band, does some jazzy kind of stuff. He's very experimental. Anyway, check out Lyle Lovett, I Love Everybody.
Okay.
Songs like Fat Babies Have No Pride.
I heard a good country and western song title recently. My best friend ran off with my wife, and boy, do I miss him.
That'd be you and Ruddy. Yeah, like his lyrics are quite funny, quite satirical, acerbic. It's got that humorous thing. Oh, the Sparks just came out with an EP too for the. I know we've got some listeners that love the Sparks like I do. Check out their new EP. Our last album that came out 6 months ago was called Mad, and they just came out with a 4-track EP called Madder. And all the tracks are great. They're terrific. Ron just turned 80. Russell just turned 78. Their songs are terrific. Very funny. Great riffs. Anyway, so that's my music for this week.
Good. I'll check it out. And the movie too. Looking forward to Tarkovsky.
Oh, it's really good. Like really good. Yeah. Okay. Talk to you in a minute when we do the US show.
Yeah.
Have a good week, everyone.
Yeah. Keep up with the good work. Markets.